Good evening, everyone. Time for another silver update. This is the 15-minute chart of silver provided by netdania.com. You can click on the link below. Got a couple of trend lines drawn here. These are some primary downtrend lines. You can see the major one here ends at 28. The secondary one here ends at about 27.75. So these are going to be the price targets we're looking to get through, maybe to establish that we have made some kind of intermediate bottom with this move. You can see that after hours we have a pretty strong rally. The other thing that I pointed out here is that we did have some significant volume come in today with kind of this whipsaw effect that we had. We ran to 28 and then we whipsawed all the way down to 26.75, and you can see we're running back towards 28 in the after hours. That's some tremendous volatility, and that was accompanied by not tremendous volume but some significant volume. So you can see one here is about a 12,000 contract trade in, I think each of these ticks is 15 minutes. So within 15 minutes that traded, and that's 12,000 times 5,000, so that's what, 60 million ounces. That's nearly 10% of all the silver mined in a year. So that's a significant amount of volume. Is that going to be the bottom? I would say bottom between now and when? Bottom between now and before it goes up above 30 again. My best guess would be there's probably about a 60% chance that this is some kind of bottom that will last all the way back up to 30. And then I would say maybe a 40% chance that we're going to turn down again when we hit one of these lines and go down and see if we can break through 26 down towards that open air pocket area between 22 roughly and 26. So I give it about a 60-40 on that. The other market story, of course, is going to be the dollar. We're hearing a lot of news in the financial press about a flight to safety in the dollar, and the dollar is seen as a safe haven. We've heard those stories before, that they've been bandied about. They're frequently bandied about. I don't see anything about the dollar that makes it a safe haven. If you look on the long-term chart here, you can see that the move that we have is kind of just a very small speck. Now it does seem to be significant in that it appears to be penetrating this long established downtrend line, but then again, in the big picture of things, you can see that this rally is very, very small and doesn't really matter much. We would really need to get up to 90 or so to completely turn this trend around. And again, you have to remember that with the dollar, you're really just talking about a basket of currencies, and that's what this is being measured by. So are those currencies depreciating as well? Yes, they are. So their governments are printing up the money, and so it really isn't a very meaningful measure. Looking at gold and other currencies as well as the dollar is probably a much better measure of the relative value of currencies, because just measuring them against each other just tells you which government is the worst of the worst. When you have a weak currency, and when you have a strong currency, you're saying basically this government is the best of the worst, but they're all the worst. So that doesn't really mean very much. Now over to the question of the night, and that is from Silver Guru. Kind of a long question. I'm going to go ahead and read the whole thing because it's something that you see a lot. Thanks for all your work. I've been a fan for years. I hope you're doing better with your medical situation. I remember you in my prayers. I posted this in the comments on YouTube. Decided to post it here too. Recently, I came across information that the U.S. became a corporation per Congressional Acts of February 21st, 1871, which made D.C. a corporate municipality that could sue and be sued. Later, that corporation became the federal government by assuming power as the de facto government, eliminating the republic. Now, when you are born, you're given a birth certificate. The certificate implies ownership or debt. Your name on that document is all in cash. caps, which in the U.S. style manual states a government entity, corporation, or deceased person. The proper noun of someone's name only is the first letter capitalized. This is the case with all government and legal documents I've seen. What I've seen is that your silence is considered consent to being identified as this entity rather than the individual person. The entity is what enters into a contract with the corporate government when you get a marriage license, driver's license, etc. Your birth certificate is sent to Vital Records and then the Census Bureau in the Department of Commerce. After that, the Depository Trust Company creates a bond on the future taxes that entity will pay. These bonds are then sold to the Treasury, who uses them as collateral to issue treasuries, bills, notes. Apparently is how you define your terms. The United States of America is a sovereign nation, but U.S., United States, and United States of America, all caps, are all purportedly corporations with registered trademarks. I'm not trying to get into some conspiracy theory, but from all my research this seems to be true. Also involved in this is something to do with the difference between legal and lawful. Given your experience in legal and financial matters, I thought you would be the person to ask to see if this is a road that is worthy to keep investigating or something that is fruitless and not worth looking into. Well, unfortunately for a lot of people who are going to disagree with me, I have to say that it's definitely the latter. It's not worth looking into. I've spent a lot of time investigating these claims. I've spent a lot of time investigating the 16th Amendment claims about the IRS, and inevitably those people who recommend those things and the people, even worse, the people who follow those things, inevitably end up in jail. Yes, you can find some who have won their cases, and yes, there are some very legitimate arguments. I'm not going to argue that there aren't very legitimate arguments. There are very legitimate issues about the way that the 16th Amendment was ratified. There are very legitimate arguments about the IRS itself. There are very legitimate arguments about your birth certificate and what that actually represents. But I have not found really any merit with this all caps thing and this corporation thing. There's also the Admiralty legislation, or the Admiralty law and the birth and all that stuff. I really haven't found any consistency or logic to what is in those things, and I've chased quite a few rabbit trails on those. So for me, it's going to be one of those tinfoil hat things that I'm going to dismiss. What I found is that generally the people that get involved in those things and act on advice based on those things tend to get in trouble, and I would not advise that. Not that I'm an advisor, but certainly for my friends, I would not advise that they follow those paths. I'm not saying that the law isn't corrupt. Clearly it is, but it does have a very clear pattern to it, and there's a very clear precedent that if you don't pay your taxes and you try to come up with some tricky argument, you're probably going to end up losing a tremendous amount of money fighting the IRS. You can just ask Peter Schiff's dad or any number of others, regardless of whether they may be correct morally, or whether they may be correct logically, or whether they may even be correct historically. You have to be realistic looking at the type of power that the IRS has, and I think that taking them on with some of these, at least in my opinion, shaky arguments is probably not a wise thing to do. Now, to continue on with this tinfoil hat theme, I thought I would play a little bit of the latest Lindsey Williams. As you know, the derivative loss by JP Morgan of $2 billion was announced, and Lindsey's connecting that with some very serious stuff. So I want to play a little bit of that and then comment. So this is Lindsey Williams. I believe it's on the Stanley Monteith show.
Now, the Comptroller of Currencies made the statement just recently, and I'll give you the actual facts. The Comptroller of Currencies says that the two big-to-fail banks, and you know approximately who those are exposed to derivatives in the following manner, to the following amount, I should say. J.P. Morgan Chase is exposed right now to $70.1 trillion in derivatives. This is mind-boggling. You understand that our national debt is only $15.1 trillion. J.P. Morgan Chase, who has been bailed out by the Federal Reserve, along with Citibank, Bank of America, Goldman Sachs, and all the rest, listen to their exposure in the derivative market, which is no more than a glorified Las Vegas, except practiced by the multi-billion millionaires. Okay, J.P. Morgan Chase is exposed to $70.1 trillion of derivatives. Citibank is exposed to $52.1 trillion. Bank of America is exposed to $50.1 trillion in derivatives. Trillion. You heard me. I didn't say million. Trillion. Goldman Sachs is exposed to $44.2 trillion in derivatives. These are nothing but bets that they use as collateral for financial instruments. Now, here are the figures that will stun you. The 9 largest U.S. banks have a total of more than $200 trillion worth of derivative market exposure. I said that slowly because it's so startling and mind-boggling. And you realize that the taxpayer is the one that is obligated to all of this? Now, this $200 trillion worth of exposure on glorified Las Vegas type bets that the banks call derivatives, this is approximately 3 times the size of the entire global economy. Not just the United States of America, 3 times the size of the global economy. Now, my elitist friend told me about a week prior to my doing the CD recording with Stan just last week. He said, you need to watch 4 things. And he gave them to me. And I gave it on this CD. Number 1, he said, you must watch derivatives. And he said, if there's any doubt in your mind what they are, then he said, you must find out immediately. He said, number 2, whenever there starts to be a crack in the derivative market, you're going to see 3 things happen. Number 1, you first will see currency wars begin. Secondly, you'll see trade wars begin. And he said the final nail, the final straw that broke the camel's back, he said is going to be a rise in interest rates, which the Federal Reserve will announce. And whenever that happens, anything that you have in paper, you've lost it if you haven't gotten out before then. You can't wait until the European Union currency, the euro, crashes. You cannot wait till Wall Street crashes. If you wait until then, you've lost it. It's all over. Well,
okay, so there's the insider advice to Lindsey Williams recently happened, supposedly on the 8th. A lot of people are very skeptical about Lindsey Williams. I tend to believe most of what he puts out. Now, of course, he can be very irritating, long-winded. There's all kinds of criticisms, but his oil calls were definitely spot on. His calls that eventually everyone would be working for the government have seemed to come true. So I'm going to go ahead and give him the benefit of the doubt, and he's saying that you're going to see the crack starting in derivatives, then you're going to see currency and trade wars, and then you're going to see interest rates rise. So we'll keep an eye out for that. He says that it's beginning to happen, and so that's very interesting, the way that J.P. Morgan actually came out and announced a derivative loss like that, as Lindsay points out. So could be on the verge of something really big. The Lehman thing and the Bear Stearns thing. If you remember when the Bear Stearns story broke back in the spring of 2008, the story was kind of downplayed. In fact, they just said that, well, Bear's got a couple of funds, stray funds, and they're just going to toss some money at them, and that'll take care of that. And it was okay for a while. It wasn't until a bit later that the full details were revealed, and of course then we know what happened. Bear Stearns closed on a Friday, and they never opened again, and they were told they were worth $2 a share. So those things can start slowly and snowball. it very well could be the case with JP Morgan. We'll just have to wait and see. And the last thing I wanted to cover is, of course, we want to look at deals. We got down to about 26.75. That should allow most of the semi-numies and bullion coins to be purchased below $30. The one I found today that I really like is APMEX got in another batch of the 2012 1 ounce Somali African elephants. I have the 2011s. I currently don't have any of the 2012s. I'd like to pick these up right now, but I'm not in a position to. But you can see that the price is $31.17 if you get 500 or more. Well, that's not really going to happen because you can see that they don't have 500 or more. They have about 496. So you're looking at $31.67. That's going to be maybe $4 over spot, something like that. So that's a little high, maybe $1 high, but I think this is probably going to be a good play. So this is my pick for the day that I like, and we'll see how many they have left in the next few days. So back to the main story. Silver is kind of doing a little bit of a bounce. Doesn't really show up on the daily chart. You can see that if we rallied from here and we did not go down, then our candlestick would be somewhat of a spike candlestick, but not a real serious spike. Let's zoom in a little bit. So you can see it would not anywhere rival this spike. It's closer to this spike, but it would actually be a little bit smaller. So this could be a spike where we put in a bottom. Like I said, I'll give it about a 60% chance that we rally from here, go above 30, and about a 40% chance that we round down and go through and test 26 again. And we'll talk to you next time.